Right, traders, stop overcomplicating your trading, and in this video I'm going to show you exactly what you need to do. So what we're going to do is go to indicators on TradingView and type in round numbers 50. Okay, so type that in onto your TradingView, click it and add it to your chart. Simple as that. Okay, if you want to double click it and maybe change this bottom bit to 3, that's basically saying how many lines do you want above and below price. Maybe change it to 10. Okay, so now on your chart, you have all of these lines. Now, what do you notice about these lines a lot of the time? And this also applies to multiple pairs, all pairs. Some it's going to work a lot better than others. So, for example, if I go to a Euro Australian dollar, for argument's sake, if I spell it right, if we do that and go to, let's say, here, what do you notice about the lines that have been pre-drawn on the chart by the indicator? What you can see is that price heavily bounce, respects these areas, wicks into them, bounces, and things like that. What are these? These are round numbers, psychological numbers. Think of it this way. If someone is buying, I don't know, let's say someone wants to buy Euro Australian dollar at 162. Okay, so that's a round number because it's got a 0, 0 at the end. A round number in Forex terms is going to be every 50 pips. So 162, 162.50, 163, 163.50. These round numbers are psychological. So if someone's entering a trade, instead of targeting, if we look at like 163.50, for example, if someone's in a trade, are they going to chase and TP at 163.369? No, not really. And especially the big institutions, if you're pulling money into the market, you're just going to have round numbers. And if you look at like the economic calendar and look at price forecasts for the week ahead, you'll see that places like Goldman Sachs and places like that, they will forecast based on Euro US dollar 117, 118, and things like that. So these round numbers are very, very powerful. And if I just zoom into what's happened recently, if we look at Euro Australian dollar, price bounced, broke below, retested the next, came back to retest the area, it broke, pushed down. This area is broke, but now look, it's retesting it. So there's an argument that price might continue to push down. So when it comes to these round numbers, it's good to have them on your chart. It doesn't matter if you trade the 3-minute time frame. So if we go to the 3-minute for argument's sake, you might trade price action. You might say that price is coming back up to retest this level and you are waiting for some form of continuation. You might want to go, right, I've got a change of character, I'm going to get in the market. You might say, I've got an engulfing candle like this, I'm in the market. Whatever you want to do, these levels are just good to have on your chart and plot just to see what price may do in the future. So Euro Australian dollar at the minute is a very good, clean example of this. It's also profit-taking levels. So if you see prices coming up towards a level, if we look here, price blasted through this level at 1664 and blasted through 164.50. But what do you notice? There was nothing for price to contend with at these levels. It was just all the way down, all the way up. Instead, what price did was react at the recent structure in line with the round number at 165. What then happened here? Price came down into the round number. And again, depending on how you want to do it, you had a bounce there with a miss, but you had a bounce here, which then hit the other round number. So going places like this, for example, going for your round number, and I guess if you want to maybe do it with the full bit of structure like that, price has come into recent structure, in and around a round number, and bounced. So this is where pending orders come into play. I've literally today, and the group are in this trade as well, I have shorted 116. Okay, so if I show you on my actual chart, this is what I'm in right now. Targeting a 1 to 2, everything's looking good. So this is just using the round numbers. If we go to gold, and let me just get rid of all these for a minute, I've plotted the round numbers again on here. What do you notice? And obviously gold is a lot more volatile, but it's something to pay attention to. When price comes up to these round numbers, a lot of the time you are going to get some form of reaction. So if you look, you've got bounce, a bounce. And if you match this with other confluences, that's when you're going to have your best areas. This isn't to say that every time price hits a round number, it's going to react. However, you can see that a lot of the substantial moves start at a round number. Price pulled back here, 4440. So again, go to your indicators, find the 50 pips round number and add it to your chart, and just add this as a layer. When you're doing your analysis, you want it as a layer so that when you're looking to enter trades, limit orders and things like that, it's something to take into consideration and keep it on your mind, because the last thing you want to do is be trading levels that are in between the round numbers, and in all honesty, price will usually make a move up to the round number. So round numbers, psychological levels, whatever you want to call them, this was a super quick breakdown on that. Hopefully, guys, you can take something from the video. Any comments or questions, leave them below, and the link to the free Telegram is going to be in the bio.